We're going to talk a little bit about some altcoins this evening. Let me get this out of my ear. Google Pod. Talk altcoins, charts, levels of interest in terms of if there's a pullback here where I want to get involved again on some of these things. Also just go over targets. See, a lot of these targets are already being met. So do want to disclose that. Like, you have to realize this stream is more about planning than anything. And hopefully you guys pick something up about charting along the way. It's all something I just kind of do because I like doing it. So we'll hop right in. I'm going to move this a little closer there. And hopefully you guys are enjoying your Friday. This is going to be my Friday. I don't have the kids this weekend. So I'm going to have a beverage and we're going to look at some speculative projects, right? So we'll go ahead and dive right into the charts. Actually, I'm going to move something real quick here. I'm going to move this chat over so I can actually watch it. There we go. Yeah, let's move it over here. Sorry about the wait. It's midday for you, Scorch. Dope. All right. That way you guys didn't have to watch me doing that. First one I have up is HBAR. Obviously, I've got a handful of them in the title. We will cover those. The Atom, Algorand, Avax, Litecoin, and HBAR. Those were just random ones that I picked out of thin air. I'm not going to lie. There's no real reason or rhyme why I picked those. They're just ones I know I'm going to talk about, so they're just in the title. HBAR, or not HBAR, Quant. We're on that sector of coins, obviously. Really, really easy chart, in my opinion. You guys know that I was looking for this guy right here. It was a gold pocket right here at the 2022 Open, and you had a 166 level here. Excuse me, along with the, I believe it was the Q4 range high. I've been wrong before. Nope, there you go, Q4 range high. So, once you're breaking back above your yearly pivot here at $124, there is a pit stop here at 145. Now, it hasn't actually stopped price in the past, but what it did do was give you a place to kind of like at least take that initial take profit in case you don't hit 166. Now, I got out at about 162. I did not try to catch the exact high here because I think that's something we should all shy away from. However, if we go out to the 3-month chart, because that's what this stands for, pit stop, 3M, 3-month SFP, swing failure pattern. So when we isolate this candle and we look, this is the 145,789 level. You've come up above this level several different times. Obviously, this is a box right here. We'll get rid of it. And wicked above and closed below, right? So we're looking to see a change of behavior here on the 3-month candle. I mean, realistically, even a monthly would be, something that you would want to see here on a higher low, right? So now you're establishing a high, a higher low potentially, and now you're looking to put in at least another push above the level. And the 2022 Open to me is a big, big area. So zooming out a little more, just to jump right into all the fun, nerdy stuff. This 178.60 level is a pretty important one. You can see your 2023 Open down here at 105, really trying to reverse price here, not fill in any more of this wick to the downside, right, from our low. So what I'd be looking for is if you can crack through 145 on like a material closing basis. We're talking like monthly or weekly. I wouldn't even say weekly. I'd say monthly is probably a good start. And it may come up this high this month and then come back down. We don't know, but you want to see the rest of the market moving with it. You get above 145. Obviously 166 is here. However, I would be aiming towards this 2022 Open personally. And I do believe, I'm trying not to jump too far over the place, but I could swear this is a 2-year pivot. Sometimes my brain does fail me though, guys. So no, yeah, it is. Look at that. So 186. So again, look at that. You've got a really, really nice zone here to be looking into between the 2022 Open at 178 and this looks to be 186.04. Big, big area. If we just put a box on that, because you guys know how much I like my boxes, right? Do something like this. Go out to like a weekly time frame. Yeah, things are starting to look good. Look at that. Look right here. You see this on the way up. Where's our pit stop? boom, getting prior price action, showing the respect, kind of chopped around it right here. You go to a monthly time frame, it's even cleaner on this right here. It looks like a rejection zone. So for me, 178 to 180, 186, big area. I'd like to see that area tested, and it's all going to depend on the 3-month swing fail. If you follow me on Twitter, we talked about Q&T, where there could be a potential bounce zone, right? I'm sure you guys are loving that we're not talking about Bitcoin. It's kind of killing me not to lead with that, but potential bounce zone for this one was actually the monthly VWAP close. That's what I marked here. I put it on Twitter. I said, realistically, I'm not all that interested in price up until, did I move this somehow? Hang on. Is that the right? Yeah, that's the right top. Realistically, I'm more interested in this gold pocket and the yearly pivot down here at 124 down to like 118, backed up by the Q4 pivot even. Really clean area. It would just be a back test of the structure. However, you came down to the VWAP close. Now, I was looking for this move coming into the close of January. I think I posted on the 29th or 30th. So you just mark the close, and that's a pretty good idea to mark the VWAP closures on, like, you could even do a previous day VWAP closure. Max does that for day trading, but the previous month VWAP closure is what you're bouncing from right now on that. So the January VWAP close. Should you not be able to reclaim 145, Bitcoin starts giving up, in my opinion, 22,810. Then yeah, we could start looking for this zone between 124, maybe even as low as 113. Realistically, do not want to lose 105. In my opinion, you lose 105, that's when things look bad. So until then, I'm looking to play this area of the chart, may even extend this box down a little bit to be upfront with you guys. And that gives us a nice like $11 window here, which is 10%, just so you guys know. It's a really big, wide zone, but trading's not often about perfection. It's just about gauging the reactions. Like right here, you got a really nice bullish reaction. You swung fill all these levels, and you continued to hold support right here on this local low, like these local lows right here from the prior structure. You just box these off right here, and you can see that these are your support zones, and you could back it up all the way down to where your stop loss would go below the low, right? This is your zone of demand, which it played off of very well. Otherwise, clean chart, very easy chart. The Q1 range is filling out quite nicely. Let's see where we're at. Yeah, so you start losing the point of control here. Obviously, you've got the VWAP close, which we've already tapped. I wouldn't look to play that again. But look where your value area low is coming in on the quarterly. It's coming in at the low there. So to me, when I'd look at something like that, I'd be like, okay, that's where I'm interested. This is your current trend of the quarter. So you are just back testing it right now. You're finding a little bit of resistance there. If you go out to like a monthly, you can probably see it a little bit cleaner. Yeah, look at that. There's your January close trend. For anyone that's in the group, you know exactly how this tool works, and you are finding resistance on it right now, which actually this needs to get adjusted. Maybe that messes things up. It doesn't. All right, perfect. So there is your January close, and this is the back test of the January regression. Very clean. So this could be a deciding point in the price for like at least the interim. Yeah, and then there's your value area low for January. So again, kind of just re-emphasizing, I'm interested in here down below this VWAP close. I want to be buying at the bottom of the range into the gold pocket, right? It needs to make sense from a risk management. Like I said, I'm not playing this. I did not play this bounce, but I am looking to get another entry on quant if it gives me one. If not, I'll find something else, right? So yeah, so much appreciated. Looks like we have about 19 of you in here. Hopefully the sound is good. I would imagine it is, because nobody's complaining yet. But I want to make sure I'm keeping up in the chat. Lola's in here. Awesome. Good to see you. Me too. I've seen someone streaming to ask to do not that. No clue if it does or not. Make sure you end on liked. I don't know. All right, cool. Yeah, I don't normally ask people to like the stream. I appreciate it if you guys do. The one thing I will say as a content creator, or someone who shares these ideas, the only way that I know that I'm doing a good or bad job is by the level of interaction I get from people. So the more interaction I get, whether it's good or bad, is the more feedback I get. So then I'm able to actually make adjustments, right? So that is Q&T. Well, let's look at Matic, actually. Matic is doing some stuff, right? So Matic has hit an area of interest for me, a really big area of interest. Excuse me. Trying not to burp after mowing down my one meal for the day. I'm currently doing the intermittent fasting thing where I eat once a day. To put things in perspective, this is the structure. This is something I gave on October 27th in the group. I gave him this little, like, basically it's just a channel. But you can see the levels play really, really well, especially when we were coming down into this region, right? So again, getting a nice high time frame structure. And then if you were to go out to like the monthly, right? Let's get rid of this guy. No longer necessary, right? We go down to the monthly, and what do you notice straight away right here? This little candle, that's where we're getting this. It's also the 2023 open. Another, again, anytime you have a yearly open, guys, very important on the chart. You've got a nice low right here that was swept multiple times, became support. So should we revisit the 2023 open or the SFP level at 75 cents, give or take? I would expect that to be a bounce territory. And then this is your quarterly low from Q4. So you can see that in October, we made a low here. And I would back that up as an area of interest for me, because this right here, this is not the Q3 low. The Q3 low is all the way down here, right? So if you go out to the quarterly chart, it's a little bit easier to see, right? So Q3 low is all the way down here. However, the quarterly chart did SFP right here on this Q3, right? So the Q3 high did get SFP'd. So we are now holding on to 105 if we're going to remain bullish, right? So what we want to see is, just like with Q&T, where we said we need to see that higher time frame closure and claim of $1 or $145. Now you've got to take a look and you've got to get $1.05, right, on a higher time frame. We need to start seeing that, because you need to see these moves transpire into the high time frames, which you've already got the monthly close above that, which is good. You got it above this monthly SFP here at $1.01. That's a big change of behavior. So now you need to see this box right here holding. Like, we don't want to come back all the way down to here. Now I think it's still going to be a place to put in a bounce. However, there's a big void down here if we revisit that. And this is where I'm looking to accumulate again. If I get the opportunity, I will definitely be buying in this like sub 50 cent region. It's just, you have to be patient. You might not get it. You might get a bigger rally. So my initial take profit was here, and I did not rebuy any of this asset on any of these dips. I traded it a little bit, but primarily just holding on to my long positions down in this region from the 40 to 30 cent region. So that's how I'm playing it. And you've come up to your yearly pivot, which was, as you can see, you had consolidation beneath resistance. You have a flat top of resistance here with higher lows. So kind of like a really nice, some people call it a flag, like a pennant. Some people will say it was an ascending triangle. It doesn't really matter, guys. Just it was bullish market structure, higher lows in place, flat top of resistance here on the closures into key support. And now you're above into what, a really high time frame target, which is the yearly pivot. Again, $1.22 was the level. And then you had the Q1 low right here just above it. So you do have a fair amount of resistance here, and you're going to want to see this area get claimed. And if so, we can start talking about much higher prices. However, based on where Bitcoin's at and everything as I'm kind of looking for pullbacks here. So to me, if price is to start returning, you're going to see a theme here where we look at a lot of the same types of data. Because this is something you've probably heard me say in the past if you've been following me for any type of period of time, especially. You have to be able to eliminate variables, meaning that you can't have constant variables inside of your analysis. You have to have something that is not changed. And for me, that comes down to time frames. Time frames are going to be your best friend, because it allows you to categorize all these tools that you're using on the daily, weekly, monthly, quarterly, things like that. Welcome to the party, Otter Gang Mafia. Thank you, Crypto Outsider. Sorry, I chew ice, by the way. I'll try not to do it because I'm not. It's rude. I get that. So for me, you can see right away, you've got a January naked point of control at this monthly SFP at $1.01. That is going to be the area that I'm interested in. You've got the high volume node here. You got a big volume gap. It's probably going to try to fill in. So again, just like we were talking about before, this box right here at $1.05.45 and $1.97, that's going to be the area of interest for me. Just beneath it, you do have this, and I'd be curious to see where the gold pocket is. I don't know if I like pulling from this. It's close enough. Close enough. Where's the overall from our low here? It's way back there. And one last thing I want to look at is I do kind of want to know where the monthly pivot is. Yeah, nope, I'm pretty happy with the spot we've got there at $1.01. I'd be very happy with this zone being an area that I'm going to bid probably. Well, I shouldn't say I'm going to, but it's a place I'm going to be interested in. And one reason why I think that we will get to $1.01 is you do have some support here at the quarterly, but what you're going to notice is that if you lose these lows right here, you've also got this big, and this is likely a single print. If we pulled it up on like ATAS or XO charts, you could probably see it in there because this is a breakout, right? And there's no real resistance here. So should you start really breaking down below these levels, taking these lows, where do you think everybody's stop losses are that long this breakout? You know, they're one down here, or they started moving them up. So you're gonna have stop losses down here that did not get taken because this is a series of higher lows. So you've got a low, into a higher low, into a slightly higher low, no real runs of the prior stops. So should you actually lose these levels, I would expect that move down. And that's like a 6 to 7% drop, backfill this NPOC, hit the monthly pivot into support here. It could even wick down even lower into this area on the chart. Do we have any levels here? We don't. We don't have any levels. Wow. That is shocking. Just the top of this old structure, right? So that's how I would trade that. I would be looking at that. I would be looking to come back down and fill that out. Man, the weekly really does not do us any favors on the volume profile, does it? So yeah, that's the area of interest for me. I'm not interested in trying to long this into resistance. It's just not a good idea. Alex O Crypto. Well, thank you, man. I much appreciate that. I'm not too familiar with you, but I'll check you out if you're on YouTube. So if you guys like TA, go watch Alex as well and leave him some nice messages. We like positivity in this space. So getting into resistance zone, you want a confirmation on the 4-hour daily, or can we play it? Something like this. So right away, if you're looking at this right up here, you've hit your resistance, right? You've already swung failed the highs. So technically, you've got your confirmation here already. What you need to see now, and this is a daily. Oh, the daily did not swing fail. The 4-hour looks good to go. However, the daily does not. So if you were to take this trade, your stop loss goes above the high. But we talked about this actually. I don't remember if it was a public live stream or if it was in the Discord. But regardless, we're going to cover it again. So I think it was the Discord. But let's say that you take this because you've swung failed the high on the 4-hour. You're happy with that. You could pull like a new range for the start of February, and you could say, okay, I'm just looking to trade this back down to the value area low initially for my first take profit, and stop loss remains up here above the high. Right now, if you get your stop loss run, which is a possibility, but let's say it just runs your stop loss and gives you the exact same setup. Like now we're on the daily time frame. Let's get rid of this here. You see how this wasn't taken? So maybe you come up and you take this high on the daily and then come back down. It stops you out, right? Well, you're still taking the second trade. You're taking that trade again. If it gave you that setup again, but this time on the daily, I'm still taking that trade. I will take that trade again. If I lose both those trades, my stop loss again, we have the perfect entry for a stop loss. It's right above the local high, and that's the best place to put it. So for me, I would look at this as an easy setup to manage. It's not necessarily about always having the perfect confirmation. It's about having the ability to put on a stop loss like risk and just calculate that. And so I'm going, okay, I can take this trade unless you're using something like order flow on side of it. And you can say, okay, I didn't actually get a good high here, so I don't know if I want to take it. But you do have as well straight away over here. You can see that you've come up and you've tagged this. So you do have the daily highs over here, the closures of the last daily highs. You could even draw this all the way over to here. You can see these two daily candles that set up the range right here. So now we're just looking left and saying, okay, is there anything else up here that's giving me this besides the quarter one low, besides the yearly pivot, besides all this, resistance? And then you have dailies that have been tagged. A new daily was set in right here, and it's getting tagged again. So, exercise caution, obviously, pay yourself. But if I was trading this, I would trade it back down to the next probably daily down here in like the 118 level. and then I'm looking to take it all the way down to here if I can. You know, I'm looking to get down in these levels. I probably front run these lows a little bit because they're going to offer up a bounce. However, that's not the end of the world. But yeah, so if Matic continues to run though, well, it can certainly continue to run, right? We've had some fun on this one. I was actually looking for something like this over time, you know, and coming up all the way to like $1.57, taking out this local high here. Now this is implying a perfect 1-to-1 in time. I don't necessarily think that has to happen, but if it did, you know, it'd be nice. It just didn't in this case. It did time the low here, but yeah, I'd be looking for, you know, something like this. See, so that's our 1-to-1 there. Let's go ahead and see where's our 1.618 R2. That would imply a high coming in like March, maybe even a little earlier. You could sometimes use the 1.5. It doesn't have to be perfect for this type of stuff. Like I know that we preach that in the group where we say, oh, we want timing, but it doesn't have to be. Yeah, there's the 1.5. So you could theoretically move this on over to like here and say, I'd be happy with this move if it came in sometime in this like region of the chart. And then again, you've got a really easy setup because you have a local high over here that you can gauge it off of. You could just say, all right, if I get a swing failure pattern of this into that Fibonacci ratio, I'd be very happy to take that trade. If not, you know, you don't take it. But yeah. Like, how would you enter and what confirmation to get in and out? If you're going strictly off of levels, right? So there's certain things that you can do, like you can do reclaims, you can do swing failure patterns. Actually, Bitcoin's a really great chart for this. So Bitcoin, for instance, right? You've actually come down and the previous day low of the, not today, but the prior session was like right here. Or was it right here? Let's see. We'll find it. We'll find it. Yeah. So let's mark out the day real quick. There's the open. Where is my close? Right here. Yeah, this is my low right there. Perfect. That's what I need to know. So this is the prior day low before we just clicked over a new day here. And you had a really nice area of confluence right here. And so you actually, this is not as clean as it looks, because if you go down to like the 1 and 5 minute, what you'll notice is that price, and I'm gonna get rid of this box real quick here. Price is at a key area of support, which for us is the prior week high, right? 23,402. You've come down, you've hit it. Now you can mark this out as the daily low because the day actually closes right here. Well, right here. That's where the day opens, right? So now we have our daily low, our prior day low in this case. So you're just marking out a really key low. This is a day trade type idea, right? Prior day low. You've come down below the level, okay? Now look at what you're doing here. You've come down below. You're now holding it as support. You've basically come back, taking the local high right here, which is at this point, is that your London high? Nope, that'd be your Asia high, actually. Yeah, you've taken the Asia highs essentially, and then that's what you're doing right here in the New York session. So you can mark out your Asia high, which starts, or no, your London high starts at midnight to 4 a.m. for me, or yeah, about then. So this is essentially your London highs. You've come down below the level, you've swung fail, you've taken the low and closed back above it. You say you're holding it as support. So now you have a market structure change. So you're entering long on this. You can use the VWAP if you want to. Some people will say, okay, I'm looking for this to go back to the VWAP, right? Because I'm just looking for a regression, like a mean reversion. And I hate how this is happening on TradingView. It's like pulling all the fixed ranges right here. It does it every now and then. But you even come back to it and hold it as support. The previous day low is now support. So your stop loss doesn't move. It stays below the low because you've got a change here coming on. And all you're doing is you're running it to the VWAP and you're running it to the prior session high. This is a day trading session, right? So that's all we're doing is trading it on a daily session. And so now you're getting out of this. And on a day trade, let's say you don't even get the perfect entry. You enter like right here on this candle and you exit right here before the VWAP. 0.35%. You run it to the next highs, session highs, it's 0.62%. Believe it or not, that's a fucking awesome day trade. But it gave you multiple trades before. So you came up above the prior session high. You've now come back below it and you're regarding it as resistance. So what are we doing? Well, now we're looking for the session lows. Okay, so now we're looking for, okay, where's my New York session low? New York session starts at 6 a.m. for me anyway. So we've come up, we've made a high, we've taken the prior session high. Where's my prior session low? Right, yeah, right there. Now you're looking to trade it back down to the prior session low. You've taken the prior session low, which we're going to delete. And again, the previous day low is still the key level. And look how it's being respected. So you're just trying to play the previous day range in this case. That's how you're getting your entry for that. So hopefully that makes sense. That was kind of jumbled. But I was trying to think of an example like right away that was active that I could be like, okay, we can go over this real time. But as soon as you reclaim the previous day low, and you've got multiple swing fills down here, you can see that you've taken all these lows multiple times. And this is a really good example of right here. Let's say that you get into the trade and you get stopped out on this wick. You're taking this trade again. It's still a good trade. It's still a viable trade. It just stopped you out. And if you keep your stop loss just below the low here because you identified a good low and a good swing failure pattern on the entry, it's fine. Your risk is minimal. You're risking very little to try to reclaim this entire range again. And that's what you did. In this case, I was actually looking for the weekly open. It did not hit the weekly open. But trading's not perfect all the time. So it is one of those things. So that's kind of a poor example. Let's look at Matic and see if there's a case where we could find an entry for Matic here. Sometimes you need to zoom out a little bit to like the weekly. This is a pretty good example right here, actually. So we're going to move this guy over a little bit so we don't have to actually look at it. So these are your weekly highs, and I like the weekly chart quite a bit. You'll find me on it, the higher time frames quite a bit. So you obviously made a weekly high here and you swung fail this one and you came back down and you put in another low. And this is another example of that's why you take that initial first take profit, which you should have gotten here. And you came up and you hit these, right? Took all the highs. Stop loss is now new trade. We're back above the high here because what did we do? We came down, we closed beneath it, right? On bearish market structure, you go to the daily. Where are we at? Okay. You've come up, you've taken this local high, even on the daily. Now you've swung failed on a daily, which you've got right here. And it gives you a perfect back test of the swing failure pattern on a daily. So now you're just zooming in. So you're saying, okay, I know what my weekly high is. It's been taken. What's it look like on the daily? We're zooming in. So now we've marked the high on the daily that's taken inside of that weekly candle. So this is all inside the weekly candle we were just looking at, right? We go back out to here and you'll notice that this line doesn't line up to anything. Okay. But if we go into the daily, there it is. So you've come up to the daily, the prior daily high that was just swept, and it should offer up resistance. You go down to the 4 hour, so now we're just kind of creeping down. And what do you notice? You've got a nice bounce back into your SFP. This is your entry if you missed it up here already, and you're just putting your stop loss above the overall high. Again, you should only be losing 1 to 3% on that trade because you've worked out the risk management in it. You know what your position size is supposed to be. And then you're trading this back down and you're saying, okay, I have a bigger range here. This is a major, major resistance because it's the quarterly SFP, the $5 mark and the $1 mark. So I know where I'm at on the chart in the high time frames. Now I'm just zooming in using the weekly, the daily, the 4 hour to kind of like find my entry, how I want to trade this. And then I'm just going to trade it back down to support, which I know support is this swing failure pattern at 75 cents, which is very visible, I believe, on the weekly time frame. Right here. It was at one point. Nope. Maybe we need to go to the monthly. There it is. That's my monthly, right? And so we've already got that. We have a monthly swing failure pattern. Okay. You've got support here at the Q4 low. I know that this is where I'm going to be wanting to set up for support at some point. And I'm just trading this as a range until it isn't. So you're going to lose a trade eventually. Let's put it that way. There is no such thing as perfection. You will lose a trade. So you have to account for that in the math. The math has to math. If the math doesn't math, you can win 80 to 90% of your trades, and the 10 to 20% you lose are going to absolutely destroy you. Crypto Addict, good to see you, man. I hope you're doing well. It's been a minute, it feels like. But yeah, so with Matic, am I really that bullish here? I was looking for $1.22. We've hit $1.22. If I was in any longs, I would have at least taken a profit in this region, and I'd be looking for the back test here is where I'm going to be interested. So I'm going to pop off Matic because we've been streaming for about 29 minutes and we've got 2 coins. Algorand's a really good one. Algorand's a good one. So again, Algorand, really, really high time frame here, looking for this box over time, looking for this to come up to 35 cents. Again, we go out to the 3-month, right? Again, high time frame closures up here. Where are all of our NPOCs from the times that we need? The 6-month, the yearly, I believe the quarterly's in here too. So when we look at this, we say, okay, where would I change my mind? For me, I like to take these things and I grab a fib pool and I section them off in quarters, right? And let's actually not make that all the way over. Let's just do it like so. And we'll move it back over. There we go. Look at that. Everybody wins this way. I don't want it to be too far away. And then we'll go down to the daily if we can. Look at that. So now our key level at 26.2 cents also lines up with the 50% of this channel. If we need another channel, so like basically you're segmenting this into channels. That's all you're doing is you're just, okay, how can I isolate price action so that it makes sense, right? This is a range, and this is a range. Okay. My ideas are very clear now. I don't need to do anything with that. I can just isolate this and voila, right? And there you go. So you're at the mid range right now. You can see this was prior support and resistance. It's also a high time frame quarterly average. You've got a local average here on the monthly coming in just beneath you. So we go down again like the 4 hour, the 1 hour, and we start looking and we say, okay, well, if I start losing 26 cents here and coming down, do I have any levels in between here that I should mark out? Like, is there anything I need to be aware of? Not really, all the way down till close to 20 to 21 cents. You've got this 22-cent pivot here, which is really nice because it offers up these lows. So you can see that they were swept on the way up right here. Swing fill pattern. What did we just talk about? For I can't remember the gentleman that asked, but what we just talked about. You mark your swing failure pattern. Where's your entry? The back test, right? So we want the back test. Boom, off it goes. So we have clear invalidation. We have a stop loss. Now, though, we have a new monthly pivot. So everyone's going to be looking for this lower price, which they were right here, but you already had trap traders coming in and the move was underway. So if you start breaking down, and giving some of these levels up, and I would say this 26-cent region is going to be important. Let's look at the volume on it real quick. And we'll hop back into the price here in just a second. Yeah. That's quarter one. Let's take this back. Yeah, you lose 26 cents. You're going to be putting pressure on your trend from January anyway, and it's also the developing trend for the quarter. I mean, they're pretty much synonymous at this point. You can look at the January or the quarterly range. You can see that you're probably coming back to this point of control at a minimum. Also, your local SFP right here. So if you came down and did something like this, right? So I already know that I'm not interested in buying this again until probably at least 23 cents. And if it were to come down and do something like this, it might offer up a trade, in which case I'm probably just going to take that as a lower high. In my personal opinion, I would just be doing something like this, basically looking for where's my Fibonacci numbers, and exiting accordingly. That's all I would be doing in that scenario. If it doesn't offer a bounce here, though, and these lows are taken and there's stop losses down here and things get underway, you could be looking down to like this area right here. The value area low is coming in at about 20.94 cents. It's also a major yearly level, right? And then you'd be looking to your like dailies and weeklies. You can see this is where they settled up last time. So the trend was not in jeopardy, but the trend was getting out of hand. And where did it pull back to? It pulled back to 20.85 cents. We just talked about the value area low being at 20.94 cents. So you've got to like that. What's the weekly look like? Yeah, you're not going to have shit on the weekly. You do have a weekly low here. I would mark this weekly low personally and cruise on down to the daily. So these lows, I would just mark these lows. You've got a nice weekly low. You've got some dailies settling up here. I would be interested in trading this region of the chart again. Should it arise? Now, this one's there's such a big move that I'd be careful with this, because if you don't have a bounce here, like it doesn't bounce and start getting underway, you're going to be looking down probably to at least 18 cents, which doesn't sound like much because, you know, it's that, but that's like, what is that, like 10, 15%? Good chunk of change. Me personally, though, I'm not looking to really exit any Algorand positions until like 31 cents, give or take a few pennies. Yeah, this would get you a nice move into the gold pocket as well. Where was that quarter one at? Yeah, so like you could just box. I know we've got too many boxes on this chart already. There's too many colors going on. They're all blue. They're all some shade of blue. But this would be the region. Something like that. That 20-cent area be the area of interest. You know, again, these are zones that we might not get. You got to remember, like, we're all hypothesizing a pullback, right? And yeah, gold and everything got destroyed today. The DXY, here's another really good example, right? So I gave this level, that this is the only level that I've been having an alert on for quite some time, is this low. And I've been waiting for it, and it finally happened. And what did we do? We took it and we reclaimed it. So it's not as clean on this chart, right? So you go down to the hourly, though, and it becomes very clean. Okay, you come up, you're holding it as resistance. You came up, you back tested it. You go back to that 101.761 zone that I mapped off before. Resistance, finally gets back in, and now we're impulsing, and in my opinion, probably heading up to this like local gold pocket in this region. But that's a really good example of a level reclaim. You can see it very clear as day, unlike the hourly chart. You know, it's just Forex trades a little different. But yeah, if this is pumping, everything should be pulling back. SPX has hit resistance, right? So there's a little gap up here. Also, this gold pocket is the 0.5 is right here. So you can see the 0.5 there at 41.55. It's not as nice because it went above it on that. This is the hourly chart, but if you go to like the daily, it looks pretty clean. You've come up, you've tagged 41.55, front run a gap that everyone was probably watching. So everyone and their mom was probably looking at this gap going, we're going to fill that gap at a minimum. And it didn't get filled. Everybody got front ran. And now you're probably looking back to some level of support here, right? And the DXY is also pumping. So it's one of those things where like everything kind of goes hand in hand at that point. So I still think that the SPX comes up to these levels over time, but you know, I start to change my tune a little bit if we start losing like 4,000 again. So not married to being right about everything. It's not how things work. Should probably cover the coins that are at least in this. We've covered Algorand. We do need to cover Atom. Atom's at resistance. I gave this resistance on Sin City the other day. They asked me what I thought. I said probably gonna head up to this box. And we tapped the box, guys. The box has been tapped by the hair of its chin. So we've hit the box, and yeah, that's resistance. Not really interested in price again till what? Again, we don't have much data to work off of for this year, to be upfront with you guys. So everything is kind of, yeah. Ooh. I think I told them if we lose 1309, it would drop to like 12 bucks. Let's see. Yeah, guys, that's right. That's good. $13, 1309. 1306. 1306, yeah. You lose this level right here, and you're just going to take all these stops and probably hit this monthly pivot. I think you come down to the Q1 at 11 bucks, so personally. But yeah, you would be back down at support. It would just be back testing the structure support that you put in right here. And if you look across the board, this is something you can do very simply and say, was this relevant? And it 100% was. We'll be a little disappointed if it doesn't run to 1645 though. So this is a regression that I built based on the harmonic that's here, and it's gotten things really well. It's done very, very well because it ended here. So you can see it's resistance, now it's support, and I'd love to come up and hit the top of it. But we'll see. We'll see. The fork is a little bit cleaner, but I like this regression as well. Lose this level here, like 1380. Realistically, 1309 is what I said, but you lose, yeah, you start losing the EQ of this, and you're probably coming down to back test the bottom of the quarterly range there in terms of the fork. Avax. Yeah, we still do. And like I'm not even trading the news anymore, Lola. I cover the news because people have me on their show and they ask me to, and it's somewhat relevant, but in reality, the news is almost useless most of the time. What I do trade is the chart on the DXY though, and I'm very confident in my ability to trade candlesticks. So when I trade the DXY and I'm using that with the SPX to kind of gauge whether or not I'm bullish in the long term. And as of right now, everything's running into resistance. Bitcoin's at resistance, this big area on the chart for Bitcoin. It's one we've been eyeballing. And we know that the trend on Bitcoin can continue out to, realistically like March, if it's going to actually have a pretty long-term trend. Oh, what did I do here? There we go. So, this is how I'm calculating trend right now. And again, it could be subject to change. But it's pretty well respected in terms of parabola, which I like. You're at the gold pocket of your overall channel if you're looking at this from a high to low. And you've reached this 24 to 24/7 resistance, which is a pretty big resistance when you just, look at it across the board here. This has been the major resistance. Boom, boom, boom. Now you're back at resistance. One would expect a pullback here. I would like to see one. Doesn't mean I'm gonna get one, but again, the key level's been given. If we're really looking for an area on the chart to lose, it's gonna have to be 22,810. I know that 22,407 here on the daily is kind of says otherwise, but let's pull 22,810 over and we'll look at it real quick. I know that we're not supposed to be looking at Bitcoin. But right here, you closed above it on daily. You've never closed back below it. You start closing dailies below this. You have a bit of a change of behavior. Now, you don't want to overlook this as support by any means, but you have a big single print here. You have some things down here that we've been looking to maybe get back tested. It would make sense. And, price can definitely make this move down. I think that 20,688 area, that 20,400 to 20,000, like I think it was like 900 and some change, is pretty good support, and that's what you're seeing right here. But I mean, don't be upset if it comes all the way back down to like the range low. I don't think it's as probable, but it can happen. So that's why we pay ourselves along the way, and we know that this is a major target, but it could take its time. It could take a while, right? No, thanks, Alex. Hopefully, I'll see you again. I'll check out your channel if you're pumping out content. I'll stop by and show you some love. Yeah, no, I've had that on there for a minute, Richard. It's one of those things where like you got to be patient in this game. This game is if you get sucked into the day to day too much, you can really kind of mess with your big plans. And one of my goals for 2023, and this should transfer over to you guys, is my trading style. I'm kind of cleaning it up a little bit and focusing much more on long term. Because you're saying like, what kind of trades are you looking to make? And it's like we started prepping for 26, 7, 24 potentially in December. We were talking about, okay, this is the area where we would be interested in seeing back tested. And if we get this trap, it could happen. And when I took my entry at 16.6, it was, hey, I'm not closing this trade. I still have my other one open, the short from up higher, but I'm going to take this trade and I'm going to start hedging long in other accounts because I think that we could be in for a really awesome run. I mean, from 16.6 to 26, I mean, you got to look at that. I mean, what is that, like 5 out of 8? So that's 62.5% move, a little bit of leverage on there. It turns into a really nice trade. So that could be like the one trade I make all quarter or even half of a year. And it pretty much pays for the whole year for me. That's so to me, I look at that as those are trades that we should be focusing on as well. So I was trying to highlight that a little bit, but you still want to do those, like this is a great place to be looking to head short, in my opinion, because you are at such a great resistance. The invalidation that you got on this SFP here was just super clean. Now you'd be looking to take that back down where 22,810 at a minimum, right? That's been the level. 22,810. I would expect to see it. Then 22,400, and then after that, you're looking all the way down to like 21,000. Maybe trading it down to like 20,400 if you're really confident, but 21,000 and some change would be where I'd start to close some of that or take profits. And that head short, I'd look to run it down through this area of the chart potentially over time. But the key to that is that you're not marrying the idea that you have to be right and it just never turns around and it stays price stays correcting. You understand that price could just be correcting and then go back up. So you pay yourself and then you put your stop loss at even or above the high. And when you get stopped out, you still made money, right? That's the key. You lose the trade, but you managed it appropriately. You get stopped out, you don't care. Yeah, 21 is on there. She said 19,400, please send it, Lola. Send it. I'll be happy with that too. It doesn't matter to me what it does, but either way, it's never easy. Trading this is never easy. The easy trade is gone, in my opinion. So we'll see what happens. Let's get back to Atom real quick here. So we've identified where we're interested in Atom, kind of. Let's do just a little bit more work on it. I do want to see, have I really not done any real volume work on this one? I'm going to have to do this another time because it takes me a while to, I like to build out every single range and look at it. I know that seems a little tedious, but yeah. So again, what did I say? I want to test this pivot. This is the bottom of your quarterly range. Doesn't mean it has to hit. This is going to shift up. It's a dynamic range. It still has 2 months left, but just where it's shaping out, if we cut it off at the January close, right? Somewhere in here. Yep, still like it. So, you got to be cautious on where you enter. And so for me, if I'm looking to get back into Atom, I'm looking down in this like $12 to $11 range, this like monthly pivot on down. But if it reverses from here and it cracks 1645, I will tell you, I'm not blindly shorting this, but I will be very interested in the trade of this right here. So this is your trend-based fib extension. That's all this is. So that's from the X to the A to the D leg here. So you're using the trend that was established. And I'd be interested in shorting at 1930 and 1998. And the trend-based 1-to-1 comes in at $20.03. This like little box right here. Am I going to blindly short it? No, because I try not to do that because things can blow through here and go berserk. But I would be really interested in seeing a reaction off this level because that's up there. And if we're looking at this from a channel perspective, so if you go to modified shift, it'll actually just give you a perfect channel of the pivot points. So the X to A to D. So if you're looking at this like that, then we could put the 1-to-1 over there. And this is also your 1-to-1 in time. So if this came in on like a Wednesday on March 8th, if we hit like 20 bucks, I'd be pretty, down to play that area. Yeah, Richard, I'm still holding that. That one's a tough one, man. I've been really tempted to close that motherfucker. I'm not gonna lie. But yeah, so it's been that one's tough. But being hedged long and it being in a good profitable position, having taken those profits, it's really kind of like ease the burden of knowing that I've got such a good amount of capital tied up in that short still. But it's still so far into profit that I'm okay with holding it for now. I might, if Bitcoin starts flipping 24, I'll probably close it. I'll be upfront with you. I probably will. I think there'll just be better opportunities available in the near term, which may be the yearly pivot. We don't know, but let's move on to Avax. Sorry, I muted myself there because I was chewing on ice. I didn't want you guys to have to hear me crunching the old teeth. Yeah, so Avax was a really simple setup. We talked about this one. Again, this is your quarter 3 range, and you are finding acceptance back into it right here. Okay, so very, very simple. Going out to the quarter 3. High time frames. What do we love the high time frames, don't we? This is your quarter 3 right here from 2022. You can see that it was a really long candle. And so as you're reversing here, you're looking at the quarter 3 low right here as an area of interest at 1580. And you're just saying, man, I would love to get back in this. I've also got a 6-month pivot just above there. So 1580 and 1744. It's going to be some key levels that I need to know about, right? So now we go down to like the daily. And remember that 1580 level we were talking about? Like, you can't make it up. You're trying to find acceptance back into an old range, basically. That's all you're doing here. So you have to look at it from a range basis, in my opinion. And then you can just pull, where's my quarter 3 range, right? Where is it when I expand it to the right? That's not the right one. This one. There we go. Quarter 3 range. Let's take it to the right. So now I know where the range high was in quarter 3. It's up here. I've also happened to have a local gold pocket from this high to low coming in. So I know I have resistance here. Okay. So I'm not longing into this area. I know that's a bad idea. I should say it's a bad idea. It's just not a great idea, right? There you go. I'm glad you took some profit, Addict, because you're coming up into an area that's, it's going to be resistance more than likely. But if you cleared it, like let's say you cleared like this $20 area, give or take, yeah, you could be looking up to like $30, but we don't know that's going to happen. Me personally, I'd be looking at this all as one giant range, and I would be looking to exit at certain levels. And what I mean by that is I want to be buying towards the bottom of it, and I want to be selling towards the top of it. And you're getting to that point where you're past the EQ of it, the 61.8%. In fact, that's just past the 50% mark. So you want to start looking at profits there. So realistically, 1928, this little local low here is going to be important. I had worked up quite a bit on this one at some point or another. Yeah. Let's see. Got too much shit on here. Let's start weeding through it. Yeah, you know what? I would say $17. I would want to hang on to that. It's a far cry away, but it's where I'd want to be. Obviously, you could bounce at 1928, but I'd like to have this 17 area. But that's a little selfish. But maybe not unrealistic. Yeah, 1928 is going to be support. That's your old value high from January, but you've already tested it. So again, you start breaking down from 1928, this support right here. I think there's a pretty good chance that you fill out this like $17 down to 1580. This little pocket here, you should have support in this region. I would imagine so. Somewhere right here. And yeah, that's your monthly pivot. Also, yeah, the $17 zone is going to be big. This is kind of a big box. I don't like doing that, but I would be looking for this personally. I don't know where our gold pocket is on this low. Just beneath it. Not nearly as clean, but where would it need to top out at if the gold pocket was coming in there though? Now we're getting somewhere. We're getting like very speculative that we'll get another push up, basically like $24. We'll see. Me personally, I'm not buying in this area. I'm really only interested in entertaining support. And I think this is the major support area for now. You lose that and you're looking all the way back down to $11. Avax could put on a good size run though. It already has, obviously, but I don't think it just moons from here straight up. I think that's highly unlikely. You can see what happens. eventually things come back to earth. So Avax is a little bit tougher. It's run a little harder. Yeah, it's better to take the profits for sure. I agree. You know as well as anyone there's going to be another trade. Yeah, so I'd be looking at this like local gold pocket here. If it gets cleared, it's probably going to 28.50. So I'd be a little cautious on that one. I wouldn't be just like YOLOing shorts up here. But if you're looking for a pullback, I think that could be an area. Sorry, I'm just tinkering now. I'm not as familiar with this chart. I need to do more work on it, obviously, but I would like to. I'd like to go on a date with it. Oh man, no real deviation either. Wow. Part of me doesn't like this low. I'm not gonna lie. Part of me thinks that this thing's gonna come down to here at some point, but I've been wrong before. So that's just the doom and gloom in me. I would be looking for 28.50 over time eventually, though. I think that it will come up to that level. It's just a matter of if you get a pullback or not. Yeah. You're chewing on mezcal. Did you eat the worm, Lolola? Do you do that whole bit with the mezcal? Where is let's take a look at HBAR. HBAR is everybody's favorite. HBAR came down to some pretty big levels. Didn't quite hit all the targets. It kind of front ran a lot of them actually, but very aggressive downtrend. Really, really aggressive actually. Let's get out a log. Oh, that just looks so bad. I mean, straight away, I hope you guys can see where this is probably going to go. Everyone's looking at these local highs. However, right away, we don't even have to do any real work. This one made it really easy by just zooming out. You're probably heading up to these local lows here. We'll go to the 3-month. Yeah, look at that. We'll just map this one out right here. What's the yearly look like? And this will be your trigger right here. 8 cents. Yeah, looks good. Looks good and clean. I would expect that if you can clear 8.45 cents that you're going to make the trip up here to this little box. Purely out of curiosity. Ooh. Yeah. Yep. Man, that's such a wide zone. Yeah, you clear 8 cents and this thing could damn near double. It's got to live up here, though. It's got to be over here on like a monthly time frame. Me personally, I'd be more inclined to think that you're going to get something like this. right? Like a range like this in an ideal world. And everyone's always going to ask, like, where are you buying on the, if there's a pullback? And it's like, fuck, dude. I mean, didn't really set up any like local levels of support for you, to be completely honest with you. So you just have to pull your range and say that I'm interested down here between 5 and 4.5 cents again. Probably the most likely area that I would be want to get involved. It's a pretty big range that dates back quite a ways. Let's see just from the breakdown of that box up there. Yeah, there you go. There's your range. It's perfect. How about that? Value area high, point of control. I'd be interested again down here at the value area low. Indeed. Damn you. There you go. There's your box. Between 5.29 cents all the way down to 4.57. Unfortunately, it's a wide box, but you can also see it's support here. There's a pseudo support right there. And who knows what it looks like when we extend it over. It looks pretty good. This is where I'd be interested in. I don't really get too far into anything else, but this is the last place there was real support. You're still inside of this range. It's got a very large bottom going on here, so this could take some time. You got a potential left shoulder, potential head, potential left shoulder, and maybe you get a breakout. That breakout could lead you to a push up to here between 13 and 19 cents, which is really high up there, but could very well happen, you know. But that's assuming that this puts in some kind of accumulation. I doubt it's just going to rocket out of here personally, but that's just me. You need like a bull market and some hype. Said chewing because you were chewing ice, but some seltzer water and some orange slash and some worm salt. There you go. That sounds pretty good, actually. You know, there's a lot of maxis in the space. You know how I like to rile them up, but yeah, there's some HBAR maxis out there, and they got humbled. I think people fail to realize, and this is a really unpopular opinion, people fail to realize that the fundamentals and the things that you love about this token that got you interested in the partnerships or whatever the fuck it may be don't actually matter. They don't. The only thing that was pushing this market up was hype. And that's it. So hype and people YOLOing funds. Yep. So no matter what it was, it all got wrecked. It wasn't just, HBAR. It wasn't just, Bitcoin, Ethereum, all of them. Some of them got wrecked worse than others, but HBAR definitely, HBAR and Quant both got absolutely wrecked. And it's usually the coins with the strongest communities, and I use the air quotes, are the ones that get it the worst when all the chips fall, so to speak. Let's look at Litecoin real quick here, because I said I would. It's in the title. Litecoin's going to do me dirty and not hit my box, and that's going to piss me off. I'm not going to lie. But we're getting there. We're so close. Technically, it's hit the gold pocket, it hit the original box, but we adjusted the box last night, and now it's not hitting it, which is not my favorite. But this has been technical support and resistance for this asset so many times. Boom, boom, boom. Again, right here. And we keep going, guys. It just keeps giving. It's just the box that keeps giving. So I want to see this get into this like 104 to 112 box. And if you can clear that, the destination is very clear. It's $146. However, you're at the gold pocket. You're at this box. So it's been massive support. Also been very good support and resistance throughout history. I would expect this to be an area of resistance. But if you clear it, you get 40% in front of you, right? Not bad. Not bad at all for Litecoin. Where do we change our minds about Litecoin, though? The November high, about 83 bucks, is not something I'd be too inclined in living beneath, because then it looks like it's going to press to 64, in my opinion, at some point. And if you lose 64, that's your breakout, man. That's where you were trading on the breakout. So there's the key low. Took the low. It looks very similar to Bitcoin at like 12K, which never came, that structure. But yeah, I would be interested to see if this one actually makes that run into this box and then how it reacts. Because if it clears through this zone, you know, like 112, I mean, I do think you'll see that 146 is definitely on the horizon. So, all right, guys, it's been an hour. I'm gonna chew on some ice, finish my one cocktail. It's a Moscow Mule. I don't use the cup. But if there are coins you want me to cover in the next Altcoin Friday or in a static video in the meantime, I'm trying to like ramp up my production of content for you guys. It's been a little rough because I do a lot of live streams. There's 2 or 3 live streams a week for the group. Live stream every morning for YouTube, Debate Crypto, Sin City, other channels occasionally ask me to come on when I go. And then Altcoin Friday. So, you know, I'm live streaming 2 or 3 times a day sometimes. So bear with me, but I would like to put out more static content, shorter format, near. He said near. I actually owe a guy that on YouTube. I feel bad that I haven't made that video. So near will probably be something that I have to get to, but I'm going to hop off here, try to get some sleep. It is Saturday or Friday. Tomorrow is Saturday. And yeah, we'll do this again. All right. Thanks for watching, guys, and we'll catch you in the next live stream.